Kia ora te whānau. Today I'm joined by Brad Olsen, Chief Executive and Principal Economist at Infometrics, and one of New Zealand's most well-known economic commentators. Brad has built a reputation for breaking down complex economic issues in a way that's clear and practical, for everyday New Zealanders. And as you all know, I have one rule on this podcast, and that is that we have to use simple words because finance doesn't have to be that complicated. So, no mai haere mai iwa, welcome to the show.
Thank you so much for having me. It's great to be able to have a proper chat. Normally, we're sort of just seeing each other ships in the night when there's so much going on, but really nice to actually have a proper sit down.
Yeah, I'm really looking forward to this too. It's a bit of a tough circumstance to be interviewing you, but I think that there's a lot of value that you can bring to the conversation today, and a lot of my audience will really value your thoughts. So, I guess to start us off a bit broadly, what do you see as the biggest economic risk that the conflict in the Middle East could pose for New Zealanders right now?
Look, the biggest one is still going to be around fuel prices. From a household perspective, you pay for fuel. You go and put petrol in the car, or you have to fill up, the boat with diesel if you're going out fishing or whatever else it might be. And it's become a whole lot more expensive. A couple of weeks back, we were seeing petrol prices 91, which is the sort of standard for most people, was at like $2.50-ish a litre
Yeah.
across the country. Different depending on exactly where you were, but now increased to like $3 a litre. Extra 50 cents is a lot for households. When you think of filling up a car, it really starts to add up. Now, the difficulty there is not only that households have to pay that, but it's also that fuel costs more generally hit across the entire sort of economic supply chain. And by what I mean by that is, like, if you are looking at you're an orchardist, you're growing fruit at the moment, or you're a dairy farmer or whatever, all of that stuff that creates the food that goes through to your supermarkets generally gets produced by using some sort of diesel run machine. And
Mm.
so there's sort of higher costs on that side. When that stuff's been produced, I don't know, let's take kiwi fruit, in the likes of Eastern Bay of Plenty. All of that stuff then has to be moved from a Portakey through to Tauranga. That goes by truck a lot of the time, which
Mm.
is a diesel run, or it goes by train, which might be diesel run, or by ship, which is also on fuel. So, like that, it's just the cost pressure that we're seeing sort of hit, and at a time when, look, it's not like the rest of life is particularly cheap. Food price inflation has been a bit more intense in recent times. We saw chocolate prices up 20% at the start of this year. Electricity and gas prices have increased at the fastest rate since the 1980s. So, for households, both directly, petrol prices are the key one, but indirectly, it's that the price of moving stuff around will then be passed through to those end prices for whatever you might buy in the shop.
I'm quite privileged to say that a lot of the time, sometimes prices can increase, and I don't actually notice some of the things. I did notice when gas prices increased, and I actually did also notice when chocolate prices increased. So, would you be able to give us some insight as to how bad this could actually get for New Zealanders? Like, we're quite isolated, but we're also quite interdependent on all of these other countries. How bad could things get for us?
Well, this is sort of almost the second point to the potential. I mean, I don't want to call it a fuel crisis, but
Hmm.
by every day, it almost becomes more of one, because the other challenge is not so much just the price that petrol might go to, but just is there going to be enough of it? So New Zealand
Mm.
generally holds about 30-ish days worth of fuel in New Zealand, like in the big tanks and that then get distributed out to fuel stations and everything else. There's normally another sort of 30 days or so in ships on their way to New Zealand that'll sort of replenish us. New Zealand gets its fuel from generally South Korea. About half of our fuel comes from South Korea directly, another third or so coming from the likes of Singapore, because they've got big refineries. They buy their crude oil, the sort of first input into this process, from the Middle East. And that's where the sort of issue becomes. You've got a whole bunch of oil that is coming out of the ground in Saudi Arabia, other parts of the Middle East, that physically cannot get through and out of the region because no one's sending their tankers through the Strait of Hormuz, and about 20% of the world's oil goes there. Now, I say all of that because there's sort of a little bit of a concern. It's not strong yet, but we're just cautious and worried, is that in like 30 days' time, is there enough oil that starts to come through to New Zealand? Have those refineries in Southeast Asia got the input product, the raw crude oil, and are they sending us the refined stuff? Because if they don't, then you've already started to see some probably slightly alarmist headlines from
Yeah.
government, about carless days or, rationing fuel. We're not there yet, but I think people are cautious because there is this question of, look, it might be more expensive at the moment, but in the future, can you actually find fuel to put in the car?
Wow. I was actually listening to a podcast. I can't say that I lived through these times, but I did hear that these oil crises have happened before. Things have recovered, and there were things like the carless days, and some of the wealthy might have two car households, and so they were able to kind of opt out of those things. So it's largely, our lower class who are going to be impacted by these things. What do you think the probability is of this happening?
In terms of us actually running out of fuel,
Mm,
I'm not. It's not my key concern at the
hmm
moment. I think we do have ample supplies, and it looks like government is working to make sure there's more coming. But it's a concern, and I think it's sort of how you. I think we've got to have an intelligent conversation as a country, and by that I
mm,
mean, let's not overblow it and say, look, there's no fuel left, because there is, but let's
yes.
not completely forget about the potential risk. We've just got to be cautious. You're totally right, though, that look, the challenge for high fuel prices will fall on those who are doing it toughest in
Mm,
society already, and that's because, look, as fuel prices go up, there are a bunch of better off households that they can adjust their spending. They can decide not to drive as much because they've got other options. They might be able to work from home. They could carpool with other people. They could not use their car as much. You've also got, general pricing pressures. As prices go up, people generally spend less on goods like fuel because they go, well, I don't have as much money on it. It's not worth as much. I'm going to sort of have to be more careful. And so
mm,
over time, I'd expect you'll see more people that are, they might be carpooling, they might be using public transport a lot more. I think that's quite efficient and effective. But there are also going to be some people whose jobs require them to drive,
yeah.
or to get to a job where there's not a good public transport route or whatever else it might be, particularly those people that might live more provincial or rurally in New Zealand. And so that's sort of where the worry hits, is those who can't avoid or can't change their behavior because of the pricing pressures, they're just going to be hit with it. And that's why it's, I mean, interesting. There's a lot of talk at the moment over what do we do about this. And there's been various calls to government, that they should cut the fuel taxes or whatever. The thing with cutting those fuel taxes is it's very, very blunt.
Mm,
One, it actually says to people you should spend more on fuel because now it's cheaper. That's not really the signal we want to give. But also, to cut to fuel taxes generally gives a heck of a lot more money to those upper income households who spend more on petrol, and doesn't provide as much relief to those who actually need it, who are generally poorer parts of society, or those who are often just your general working class people who just have to get around.
that's really interesting. Some economists have started talking about the risk of stagflation. For people who don't follow economic jargon, what is that, and what is the real risk of that happening in New Zealand?
Yeah, so stagflation came through a lot in the sort of 1970s, 1980s in parts of New Zealand, well, parts of the world. And it
Mm,
was after oil shocks as well. And effectively, stagflation is where you have the economy that's stagnant, not moving anywhere quick, effectively economic activity not rising, which normally means that there's not enough jobs growth happening. Everyone's not doing enough. The economy's sort of just sagging. Whereas at the same time, you also have more intense inflation. So you've got people who don't necessarily have jobs. There's not a lot of great economic activity, but man, you are paying more and more for goods over time. And so this sort of awkward circumstance where you have enough growth, but very high inflation is what we generally term stagflation. Now, if we were to see more of it at the moment, it would be a different type of stagflation than what you might have seen in the 70s and 80s. Like at that point, you were seeing inflation of like double digits. The numbers were whipsawing around massively.
mm,
Economic activity, employment was going up, then it was going down. It was a bit crazy.
yeah.
At the moment, we're seeing headline inflation in New Zealand at 3.1%. That's the average across all goods. We'd be expecting, I think Treasury said today they were expecting something like a 3.7% inflation rate if fuel prices remain where they were. At Infometrics, we're probably a touch higher, more around the 4% mark. But regardless, that's uncomfortable. It's not easy, but it's not sort of the same inflation that we saw a couple of years back when it hit 7%. It's certainly not hitting those double digits of the 70s and 80s. So the worry, I guess, is more that, the economy has been sluggish the last couple of years. It hasn't felt great. jobless numbers have increased, people haven't got as much work, and just this year we've been seeing a bit more economic recovery coming through. Jobs have been slowly lifting, there's been a bit more spending, all that sort of good stuff. But then if you have this oil price shock that hits, if households and businesses have to spend more on fuel, they're going to spend less on other parts of the economy, and everyone just goes back into their shells because they look at conflict and go, well, I'm just not confident. I don't know if it's a good time to spend. I'm just going to sort of, hunker down.
This is thank you for this. If you were part of the lower class and you were, hearing the headlines, seeing everything that's going on, what would be some of the key things you'd be focusing on right now? Attention is one of the key things that people need to be mindful of. What would you be focusing on?
I think one of the first reflections is like there is some stuff here that you can't control. That what's happening in the Middle East, little old New Zealand doesn't have a lot of control over. So far the US president, he hasn't responded to my tweets asking him to maybe stop tariffing people. He's not going to respond to maybe help open the Strait of Hormuz. So that stuff is just out of our hands. Now that's not to say you can't do anything in response, but you can't do anything to influence that situation. So doom scrolling is only so useful. Whereas I think what you're probably more likely to be seeing already from those households are doing it tougher, is almost what they do day to day anyway. You just got to make your money go as far as possible and work for you. That means that, when it comes to shopping, given you do have, food prices that have increased over time, people will be looking very much for those deals at different points. They'll be looking for, the cheaper cut of meat. They'll be looking for produce that's in season. They'll be looking at, any deals that are going. And look, we do see some of that, but it does require people to adjust their menu a little bit. Over the last year, the likes of your beef, your steak, your mince have all increased, but the likes of chicken hasn't done a whole lot in pricing terms. So, moving more towards chicken and away from mince is possibly a bit more of an option. We've seen that as well, when it comes to other parts of spending. The other big bit that I'm certainly focused on is, again, public transport modes. Some people will move towards working from home a bit more, so they don't have to travel. Other people will be looking at public transport. If you are having to drive, I've seen quite a lot of practical tips over just how to limit how much fuel you use. Making sure that your tires are actually properly inflated can save you like 8% of your fuel. Driving ever so slightly slower. So if you're a little bit of a heavy foot on the accelerator, going at 100 Ks on a 100K road rather than 110 if you creep up that high, it can save you I think I saw something like 10% of your fuel as well. So, there's options there. The same as, what was the other one I saw recently? Air conditioning. Again, up to, I think it's 50 Ks an hour, you're almost better to maybe have your windows down. After 50 Ks an hour, having your windows down drags your car too much, so it might be worth putting the aircon on, but you sort of make that trade-off. So there are some practical things to do, and then otherwise it's just sort of good, I guess, financial hygiene, if you will, making sure that you've sort of got a clean bill of financial health, looking at, how much you're paying for power and electricity and gas. Are you getting a good deal? Are you not? Are there other options out there if you can sort of shop around? There's always different things to do. Even with just fuel purchases, I know we've talked a lot about that, but for a lot of people, checking, where you're buying the fuel from, is there a cheaper discount option nearby? Can you grab one of those, 6-10 centilitres off the fuel at Pack and Save or whatever? That makes a big difference to some households.
Thank you for this. During global uncertainty, a lot of people are seeing their KiwiSaver balances drop. A lot of people are concerned by this. What should people understand about the markets during times like this?
Yeah, look, war isn't good for a lot of things, and sort of, for business generally, everyone goes, well, war probably means, not as much money being spent on my part of the business world, and more going into, defense or making bombs or whatever else it might be. So I'm not surprised to see stock markets down. In a sense, they probably haven't dropped as much as we might have thought, given this is the biggest Middle East shock we've seen since the 70s. So it's a pretty big event. I think, though, it probably comes back a lot to what people are wanting their money to do for them, both their KiwiSavers and anything else. I remember, for example, when we had something very similar at the start of COVID, stock markets plunged. They took an absolute beating. My KiwiSaver, I looked at it at one point, it looked atrocious. I then close the app because you know what? I don't need my KiwiSaver for another 20, 30, 40 years until I retire. I'm not going to remember what happened on the 20th of March 2020 and what happened to the stock market. That'll be old news by the time I'm that old. So, because in my position, I wasn't wanting to use the money all that quickly, I didn't want to make a rash, knee jerk reaction and possibly lock in a loss. Because by the
Mm,
time you've looked at your KiwiSaver and you see the numbers already bad, it's already happened. You can't do a lot to sort of unlock that. To be fair, I'll tell you right now, my KiwiSaver is worth a lot more today than where it was even before that COVID shock. So, if you're in the market for long enough, you can sort of see through those short-term volatilities. The point I think is that, and I tell this to I'm not a financial advisor, to be clear. This is just, I think, good general advice, is that if you're worried, if you look at those numbers and you're worried because you want to use your KiwiSaver soon, now's the time not to make a knee jerk reaction, but to take some proper advice. Go and talk to someone who is qualified and go, look, here's what I want my money to do. Here's what I might need to think about. For example, if you were, thinking of using your KiwiSaver or your other investments to help you buy a property in the short term, like the next 6 months or so, or you were about to retire or whatever it might be, you might not want your KiwiSaver as exposed to the big ups and downs. So you might move it, or previously have thought about moving it from, say, a much more aggressive fund where you take lots of risks, but you maybe have more rewards, down to a much more conservative fund. Doesn't go up or down as much, but that also means that you sort of get to keep hopefully a greater normal level of your money. And so I think the big thing is, if you're coming up to those big decisions, talk about it to an expert, hopefully before the big economic shock, because I do worry that, like, a lot of people go, oh gosh, this looks awful, I need to do something with it. Not always true. And I think it really does come down to, like, what do you want your money to do for you and what's your risk tolerance like? Again, my risk tolerance, and I say this as a personal, I don't expect this applies to everyone, but for my KiwiSaver, because I know I'm not going to use it for such a long time, I go, I'm not fussed. If I was looking to use it soon, if I was looking to buy a house, I'd be a lot more fussed, absolutely, but I probably would have tried to already make it more defensive so I wasn't caught up in the big ups and downs.
This has been very helpful, Brad. Thank you so much for your time. I'll definitely be playing some slower music when I'm driving to hopefully preserve some gas in the times ahead. So yeah, I just want to say a big thank you for your time today. I know you're a busy man, so I'm really grateful for you making the time for today's interview.
This has been great fun. We must do it again sometime soon.
Definitely. Hopefully under better circumstances.
Indeed.